Good morning, everyone. Welcome to Real-Time Solutions webinar, brought to you by 5 different chambers of commerce that are working together throughout this entire crisis. Apple Valley Chamber, Burnsville Chamber, Hastings Chamber, Lakeville Chamber, and River Heights Chamber. I'm Ed Carney. I'm president of Apple Valley Chamber of Commerce. This is my 20th year as president. And our goal today, and throughout this entire series, is to address your business concerns. In 2021 now, it's all about recovery. These 2021 Real-Time Solutions series sponsor is Xcel Energy. And we just want you to know that Xcel Energy is committed to protecting the environment, embracing clean energy technology, helping our community shape our future, and also they're very, very supportive of our business community. Thank you, Xcel Energy, for making a difference in all of our communities. Our speaker originally today was John Kirshner with U.S. Chamber. He had a family conflict arise, so Ethan Hellier, who is the manager of U.S. Chamber Midwest region, which this is his 4th year as the manager for the U.S., overseeing 6 states for the U.S. Chamber. Ethan, if you recall, actually presented last spring, early in this crisis, ironically on the first PP program and IDLE and some other matters that right when you needed the news the most, he really knows his stuff. We're thrilled to have Ethan here. He also, before being manager of U.S. Chamber Midwest region for the last 4 years, he was Minnesota House Communications Specialist and staffer for 5 years. And long before that, he interned originally with Congressman Paulson. So he has quite a political career as well. Welcome, Ethan. Thank you for joining us today. And this is your chance to talk to 5 chambers. This is being recorded. Therefore, it will be going out on all of our respective websites for the 5 cities, as well as our social media. It's going to get a lot of viewers by the time it's done. We asked Ethan today if he would go through the slides a little bit faster so that we could do a little less 101, because you're all business people and you basically know the basics. And we wanted to have more time for Q&A. If you have a Q&A, please we'll be monitoring the Q&A at the top of your screen there. And also we'll be checking chat as well in case there's some questions in there. Ethan, why don't you take it away?
Great. Thanks, Ed. Thanks for having me on. And it's always good to be with my friends in the South Metro here. I just live over in Prior Lake, so I'm just a little bit outside this group. One second. I'll start with sharing my screen. While Joe Biden had Garth Brooks as a guest yesterday, I don't have any guests, but I do have a PowerPoint, so it's not as exciting, but hopefully it's helpful. So before we get started and kind of look at what was in that bill that was passed at the end of the year, kind of they call it the Phase 4 bill because it was the 4th bill that Congress had passed to kind of help us get through this crisis. It's kind of a overview, of like the whole nation's economy, and while I think everyone on this call probably has a very good grasp on it, or at least a grasp on their industry or kind of what's happening in either Apple Valley, Lakeville, or Burnsville, or Hastings, I just kind of want to give a broad overview. Well, so economy has gotten better. However, we still have 10 million fewer jobs than we did in March. There's been over 160,000 businesses that have closed since March. 60% of those, or about 100,000, are saying that they're going to stay permanently closed. At this current pace of hiring, it would take until February of 2022 to regain the jobs we lost. So it kind of seemed towards the end of 2020, or at least kind of the fall, the economy was kind of heating back up again, and then we kind of got the second wave, things slowed down again, and we're kind of at a slower pace. And the survey that we did, actually, I think it was just published this week, kind of shows that as well. We interviewed businesses of 37 different sectors, and essentially, while it definitely leans towards slightly worse of kind of how they're feeling since March, it is kind of even. Like there are businesses that are doing a lot better, some that are doing worse, some that feel about the same. But I guess I was kind of surprised to see the number as half that were feeling that it was either slightly better or slightly worse. I kind of thought it would lean towards worse. So I mean, that is, I guess, a step in the right direction here. Looking at it on this line graph that I have, you can kind of see where different sectors of the economy are at right now. This is what the economists would call a K-shape. where, everyone was kind of doing well prior to, COVID-19, and then everyone shut down, obviously when all the closures started. And then you can see, like some of the industries that really took off, if you're in tech, if you're a software company, if you're, a grocery store or like an Ace Hardware, you're probably doing it either as well as you were prior to, COVID-19 or even better. However, on the other side, if you're, a restaurant owner, or if you own, like an entertainment venue, or you have a bed and breakfast, you're probably feeling a lot worse than you did. So that was kind of the catalyst of why, Congress says, okay, we got to pass the phase 4, and we got to get more money out to people now. So talk a little bit about the PPP program. I'm sure everyone on this call knows what that is. So I'm going to just talk about some of the changes here. One of the huge changes is that you can use your PPP loan proceeds, and they are now tax deductible. That was not the case before. They were always untaxed, like if the proceeds you got, they couldn't be taxed. But what Congress really wanted to do, and what they actually intended to do when they passed the CARES Act, which had this program in it to start, is they always wanted to have essentially a net zero impact on your taxes. Now it actually, officially does. It was a little bit vague in the first bill, and Treasury said, sorry, it's not as clear as, maybe you intended. So in this bill, they really cleared that up. On top of, the qualifying expenses, you can use your, PPP loan proceeds for. You actually have a larger pool to use it now. So if if your business was hurt during the riots, you got broken windows or whatever, and your insurance doesn't cover it, you can now take PPP loan proceeds and use it to fix your windows. If you're in the restaurant business and you added a drive-through, anything that's either pandemic or riot like related upgrade, that can now be used with PPP money, where prior to that, it was really just you could pay your gas bill, electric bill, kind of those, basic operating costs. So that's, that pool's opened up. However, you still have to spend 60% of your proceeds on payroll. Other changes. If you got an EIDL grant prior to getting a PPP loan, as you remember, the EIDL grant was kind of like the cash advance to kind of get businesses kind of on the mend before they got their loan. If you got one of those grants, your PPP loan money was subtracted by that. So if you got an $8,000 EIDL grant and $150,000 PPP loan, really only got $142,000. That's no longer the case anymore. When you get the loan, you have to start spending it the day that you get it into your bank account. However, there's now flexibility of when you end it. You don't have to end it at 8 weeks, and you don't have to pick your end date once you get your loan. You got an 8 to 24 week kind of window of when you want to end it. And also, if you take a loan that's less than $150,000, now this is a new change. There is a simplified process to get your money back. It's going to be a one-page document you fill out. Essentially, you can fog a mirror, you're going to get your money back if you're under that $150,000 threshold. So talking a little bit more about this and kind of the qualifiers, I guess one important thing is that the program is going to run through the end of March or until all the funds are exhausted. To qualify for a second draw PPP loan, you have to have spent all the money all the first round PPP money you got. You have to have less than 300 people working for you, and you have to have a 25% reduction in gross revenue, comparing one quarter in 2020 to 2019. So you don't have to look at the entire year. You can just pick your worst quarter, compare it back to 2019. If there's a 25% drop, you qualify. 501c6s now qualify if you're, local news. So, think of like the Sun or the This Week, newspapers, they now qualify. And here's the big change. And I think this is really where people are going to gain a lot here, is that the employee retention tax credit, you can now get that if you get a PPP loan. When the CARES Act was first passed, you either had to go one route. People went PPP because, it was a opportunity to get more money, but now you can kind of take advantage of both. I'll talk a little bit more about that tax credit as we move on, but it's just something that I wanted to bring up. Another change is that if you're a publicly traded company, you no longer qualify to get a PPP. So the loan amount, again, this is a very simple calculation as it was before. You're going to take your average payroll costs over a 12-month period from 2019, or really any 12-month period, the borrower can choose, and you're going to multiply that by 2.5. Or if you're in the restaurant or, accommodation business, again, if you're like a B&B, you can multiply it by 3.5. So you actually have, like an opportunity to get a little bit more money. If you're a seasonal business, you can pick any 12-week period from February 15th of 19 to February 15th of 20. And now the loan is capped out at $2 million. It used to be a $5 million cap. So they're really trying to target it towards smaller businesses and smaller loan amounts. When they kind of looked, they saw a lot of people that were getting, creeping up to that 5 million amount. That was when you heard of like the, LA Lakers getting a PPP loan. They're really trying to make sure that, sports teams and, some of these teams or, some of these, businesses that are just outside the cap really don't qualify. It wasn't really intended to go to them. So that's kind of why they tampered some of those numbers down a little bit. Forgiveness process, again, is the same. If you cut the number of people working for you, or if you cut their salaries by more than a quarter, you're going to lose, some of your forgiveness money. However, those safe harbors that were there before are still there. So you can bring workers back, you can increase their pay. It's not about that you had Jim and Joe working for you prior to, the pandemic, but as long as you have Billy and Bob working for you, as long as you still have two people. So if you had two people before, you want to have two people later. If someone quits, whatever, obviously, you don't want to, it would be unfair if you got penalized if someone left, on their own accord. So you have an opportunity to bring people in. It's more about paying the same number of people. The names don't matter as much. So there's a few of those safe harbors. We can talk more about that if, people are curious kind of how they can get, maximum loan money back. So the tax credit that I was talking about, big change is that if you take a PPP loan, you can also go the tax credit route. And what's nice about this tax credit is when you think tax credit, you think, oh, I'm not going to get it till next April tax time. But what's nice is that you'll get it on a quarterly basis. So to talk a little more details on it, before it used to be 50% of $10,000 of wages you paid each person. So it ended up being up to a $5,000 tax credit on their wages. Now it's 70% on $10,000. And it covers 2 quarters. You can get up to $14,000 per worker. Before, you had to have a 50% decline in gross revenue in a quarter compared to 2019. Now it just has to be greater than 20, so it's easier to qualify. And before, you had a less or equal to 100 people working for you. Now it's 500 people or less. And it used to be only people who were not providing services. So if you're paying people to sit at home, you could qualify. Now, if you're just paying people in general, whether they're working or sitting at home, you qualify. So this really opens, it really opens all to more businesses, and they're really hoping that this tax credit, people kind of jump on this more, especially since you can use the PPP program and get this tax credit. And this tax credit will be offered until the end of June. Talk a little bit more about the EIDL loans, which we talked about. If you've probably heard of EIDL before, it's kind of the standard SBA loan program. However, they came up with these grants. I talked a couple slides prior about this, $10,000 like cash advance you could get prior to getting PPP, or some people only needed the $10,000 cash advance, so they kind of stopped there. What's nice about this is it's a grant. There's no process of getting the money back. However, they did change some of the qualifiers. Kind of like PPP, you have to have less than 300 people working for you. Now, here's a big change. You have to be located in a low-income neighborhood. So if you qualify for the new market tax credit program, you'll qualify for this. However, if you don't, then EIDL loans are kind of off the table now, or excuse me, EIDL grants. And you have to have a 30% cut in gross revenue during any 8-week period between March 2nd of 2020 and the end of the year, compared to an 8-week period prior. So if you do meet these qualifiers, and let's say you got a $4,000 EIDL grant from the start, you can apply to get the difference and get that $6,000. So the money has been renewed. However, it's harder to get. But if you got it before or didn't get it before and you qualify, you can now get up to that $10,000 cap. SBA for a while was capping it based on the number of people work for you. So if you had 5 people working for you, you could qualify up to $5,000. It was essentially one person working. It was $1,000 per person working for you. So If you qualify, it's you know, a nice program, but what's nice now is it doesn't take off your PPP loan forgiveness. Now here's a new program. This is completely new. This was not in the CARES Act, but now in the phase 4. This is for shuttered venues. So if 70% of your income comes from having, you know, a live event, whether it's a play or an artist come in, you qualify. You have less than 500 people working for you, you qualify. You have to have a 25% reduction in gross revenue again. And as long, you cannot also apply for a PPP loan for this as well. Now, if you got a PPP loan prior to December 27th of 2020, you would qualify, but after that, you would not, because they don't want you to be able to get, you know, a second draw PPP loan and this grant and EIDL and the employee retention tax credit. You know, there is a limit to kind of the things that you can dabble in and get. But what's nice about this, if you do qualify, it's a grant. So there's no forgiveness process. It's just money given to you. And they calculated it's either the less of $10 million or 45% of gross revenue in 2019. If you have a 90% or greater loss, you're going to get it first. If it's a 70% or greater loss, you'll get it second. So they're really trying to prioritize people that are really struggling to keep, you know, some of these theaters and event centers open. You can use it to pay payroll, rent, utilities, PPE. So if you need masks, whatever the case is, qualify for that. Some of the other programs in here, I'll just do this quickly. If you qualify for the stimulus, you probably got it, $600 per person per child. The UI extension is been renewed and replenished. So instead of the $600 weekly increase on top of your state benefit, it's only $300 now. And unemployment for people who have either exhausted their state money, that money has been renewed and replenished. And also for people who don't normally qualify, you know, for unemployment, if you're self-employed, you know, independent contractor, if you didn't qualify for unemployment, traditionally you qualify for it now. We have a lot of guides on our website. If you go to uschamber.com/coronavirus, we have very simple guides that kind of explains the process of going through like loan forgiveness and all that. You can check out our website. It's not the actual process what you go to, but it's a very simple way to explain things you should have ready, what tax documents you need, what sort of payroll documents you need. It just really breaks it down. I think it's really valuable. All these guides have really helped me kind of, you know, understand the program. And I think it's very helpful. One other thing I want to cover before we move to questions, because I feel like it's going to come up. So like I said, you can get a PPP loan now and you can go the tax credit route. That's brand new. However, if you get the tax credit in the PPP program, you can't use $2 to pay for $1 of value. So you can't use PPP loan money to cover payroll and then also give that same worker money from your tax credit for the payroll as well. So you gotta, you know, you gotta first figure out if you're even gonna need that much loan money. And then you gotta figure out kind of where it's gonna be, you know, allocated, because you can't double up on paying somebody just because you have two different sources of where it's coming from. So just a little word for the wise there. But I think at this point we should move to questions.
All right. Well, thank you, Ethan. Thank you for really going through that quickly so we have more time for the Q&A, especially for a new program like this. Our first question is right following what you just said. What happens if you qualify for the shuttered venue grant but already accepted a second draw PPP this past week?
If you haven't paid it out, you can return the money back.
Okay.
If you have maybe started paying it out, I would contact your lender first, and they might have to contact the SBA. But I would believe if you paid it back, whether it was their money or your money, if you're willing to pay it back, that shouldn't be a problem. Not guaranteeing anything, but I would definitely reach out sooner than later. It's my understanding that they're flexible and it shouldn't be an issue.
Okay, yeah, it's just a timing issue, I assume,
right,
for the person that sent that in. And the venue program is a little bit richer than the PPP, so they should return.
Yes.
And try to go
Yeah, I would highly recommend, if you qualify, go that route, because you're not going to have to go the forgiveness route. You're going to end up probably getting more money in the long run. They did this just because, you know, most businesses during the 2020 period had a time they were able to reopen. Obviously, if you're a live venue, there was no live events happening. So that you really had no shot to reopen. So that's why this is such a generous program as compared to, PPP and some of the other ones.
Also, by not taking this PPP, if you have a different avenue to take, makes you more likely to qualify even quicker for anything that comes out in the spring if they do a third PPP.
Sure. Yeah.
We have another question. Are businesses receiving their first PPP loan subject to the 25% gross revenue reduction requirement?
Nope, I should have covered that. If you have not taken a PPP loan in 2020 and you want to take one this year, you qualify under the first rule. So you don't have to prove that you've had any hardship. If you're less than 500 people working for you, essentially that's really kind of the big qualifier. You'll most likely qualify. No, you don't have to prove any hardship. But if you get your first round PPP now, you exhaust it, you still have a decent cut, in income and revenue, you can go still get a second one as well. Really, the only qualifier is that to get the second round after you get a first round is you got to pay it all out. You don't have to essentially go through the forgiveness process yet, but as long as it's paid out, you can go and get a second loan. As long as we're in that window between now and the end of March. In fact, the portal opened to everybody starting Monday, and they've already done, I want to say 60 or 70,000 loans. So they're really kind of putting the foot down to the gas. But from what I've heard from most people is that they're not really going to run out of money like they did before. They're able to kind of calculate. They kind of know how much was used in the first round. So there shouldn't be, I don't quote me on this, but they're telling me that, February 15th won't roll around. They go, oh, we're out of money. It seems like they should have enough now. And I would hope if they don't, it's replenished. But it's a little bit less of a race than it was before.
And speaking of dates, the end date for this is March 31st, is my understanding, correct? The
Yep.
last day to apply?
That's the last day to apply. So, obviously you can still get your loan and spend it past March 31st, but that's the last day to get it.
All right. And then what about credit unions? Are credit unions allowed to handle the PPP?
Mm-hmm. Yeah, if they want to, approve PPP loans and put that on their books, they can do that. I would recommend contacting the SBA, and they'll take you through the process and get you approved.
All right. We just had another question come in. I received notice last week that I was disapproved for the EIDL. What should that person do?
So that would mean probably most likely they're probably not qualified for that new market tax credit would be my guess. They're not in what the federal government deems as a low income area. That's kind of the big.
So the door is basically been shut on the EIDLs. Okay. As you'd mentioned earlier.
So that's kind of, the disappointment with the EIDL there, but I would highly recommend either if you didn't get a PPP loan, I would apply for one or, go for that second draw if you still have, a 25% drop in revenue.
And my understanding, the person who works with you in Washington that negotiated with Muchin and all of them, Tom Sullivan had mentioned on that Zoom that if you're less than $150,000, they're almost just handing you the money with no receipts or anything. It's over 150, you really go through the scrutiny. So if you're a smaller business, you really just jump in there. You'll have the money within a couple of days.
Yeah, I would recommend, like, if you think, I qualify for 160,000. If you can get by with that less, get by with 150 instead, I would go that route just because the forgiveness process is going to be a lot easier. It's like a one sheet, 8.5 by 11, very simple. However, obviously, if you need that extra $10,000, don't not take it just because the forgiveness process is easier. I would still highly recommend, if you really need it, take it.
You don't know what's going to happen next spring, summer, or even a year from now. So
yeah, or tomorrow.
Yeah, and then as far as benefits, when you're calculating, there's been some changes on that. The second PPP, it now includes, my understanding is healthcare benefits, HR costs, life insurance, things like that, dental, I think vision, everything is in this now. You really can prop up your payroll numbers.
Yeah, it really covers the whole payroll spectrum. Any sort of, whether it's physical money or benefits, they really want to. The whole point of the program, at least when they passed in the CARES Act, was to keep money and benefits coming through people's normal avenue. So instead of going the unemployment route, the idea was that the money still came from where it was before. Obviously, there's been propped up by the federal government, but the idea is to get your money and benefits through the same avenue that you did in February of 2020 or January of 2020.
Okay, I just had three more just pop in right away. So it might be a rapid round here. Last week, even though I received 4,000 in April, I was disapproved because it said I didn't finish the paperwork or voluntarily remove my application. I also received a PPP loan. When I called the SBC, they said now it will be income. Did you follow that?
Yeah, let me try to break that down a little bit. It sounds like they got a $4,000 EIDL grant. If you're still, if you're in a new market tax credit, area, you can qualify now to get that remaining 6,000. The SBA was probably, when you called the SBA, it was before this bill was passed. And yes, prior to this, the Treasury was saying that if you use PPP to cover costs that you normally deduct off your taxes, you weren't able to do this now. Now that's been fixed. So if you called them now, they would tell you that problem's been fixed. As long as, and it sounded like there was a PPP issue in there too. If you've paid out all the money from your first loan amount and you have that 25% cut and you have less than 300 people, you should qualify. I would recommend, maybe reaching back out to them now. However, obviously if you're going PPP loan route, you're going to want to go through your lender anyways. So you can kind of, bypass the SBA there. But if you have an EIDL grant question for them, you'll call the SBA.
The person just sent this update in. This all happened last week.
Last week. Okay. Wow. So I guess my question, did they tell you, I guess I'm curious about the tax implication question.
Why don't the person that sent that in, why don't you put your email into the Q&A portion that no one else can see, and then I'll have him follow up directly with you.
Yeah, that'd be great. I can do that.
Now we're getting a little bit too technical into one particular case.
Sure. Yeah.
The employee retention tax credit, when Tom Sullivan at the U.S. Chamber in Washington mentioned that last week, said only 6% of the businesses in the country even know about that. It's just been kind of sitting there. Can you talk about the importance of that? I mean, that's like, you could have your daycare close, and my understanding is you can get 2/3 of the pay for up to 10 weeks and 10,000 that alone. There's so many, the money's just sitting there.
Right.
And everyone should go for that. You're still paying your taxes from the employees are paying their taxes. It's the company portion, correct?
Correct. Yeah.
You retain it, so it stays in your bank account without going into payroll right away.
Right. It's supposed to, cover not only your tax portion, but, some of their, actual, payroll money as well. And a big reason why it had been sitting there is that if you got a PPP loan, you could not go the tax credit route. Now that's
now with the new PPP, you can.
Correct. Yeah. So going forward, and in fact, so what you're going to want to do is you're going to want to talk to the person who does your taxes, whether you use one of those online systems or if you actually have, like an accountant that you use or one that works for you. They'll help you with that tax credit. And what they'll be able to do is there's going to be a portion, and this should be cleared up eventually, that you can go back into 2020 and retroactively get some of this tax credit. And what's nice is that if it ends up being, if you qualify for more of that tax credit than actual taxes you owe, the IRS will write you a check. So I'd really highly recommend going that route. Now, I understand why people didn't go that route before, because the PPP loan is really kind of more of the it was the better route, but now you can do both. So highly recommend talking to the person who does your taxes to kind of work through that.
In chambers of commerce, for example, and many nonprofits, 501c6s in particular, and some other nonprofits qualify for the first time last week. Up till then, there was nothing. We weren't qualifying for the first PP. Isn't there a little bit of confusion? First of all, I was surprised when we filled this out. It was literally one page. It was even half a page. And you're just signing your name saying, yes, I qualify, basically. Yeah. I was surprised how simple it was. And people talk about PPP1 and PPP2. When I was speaking with you, it's really not a 1 or a 2. It's like if you applying for the first time, this is 1 to you.
Correct. Yeah. So even though the appeal now is the second draw and getting people to be able to apply for a second round of it. If you've never applied, you're under the first, certification process, which is much, much easier.
You get
to go.
priority.
Yeah, that as well.
Well, thank you. This has been, and did we mention seasonal? What about seasonal businesses?
So what they're going to want to do is they can pick a 12-week period somewhere in 2020. I think in the PowerPoint, I want to say it was February 15th of 19 and 20. You can pick a 12-week period, and you can use that to, find your average. So obviously, if you're a seasonal business, you still qualify. It's just calculating it is a little bit different because you're only open for part of the year.
But not more than 7 months is my understanding. So
right.
And then, for example, if you're at the state fair for 2 weeks, sorry, you're not going to qualify. It needs to be at least 12 weeks for seasonal. Well, with that, what about commissions and tips?
Sure. Yeah. So that's all, when you, obviously if you're calculating payroll, the tips are, incorporated into their wages as well. So you're really looking at an all encompassing money that goes to each worker on a monthly basis, or I guess not a monthly basis per se, but the average of a 12-month basis, and then multiplying it by 2.5. So that, that covers their base wage, tips, anything that goes through the, IRS, that's the money that qualifies. So if it's their taxable income, you'll take a 12-month period, take all that money, you'll divide it by 12 to find the average month. And then obviously the restaurant, you're going to multiply it by 3.5 instead of 2.5. But yeah, it's all money and benefits that go towards the worker, as long as it's typically goes through, like the IRS. If you work more of a, cash tip, sort of, I guess you could say under the table, that wouldn't qualify. It's got to be like IRS qualifying wages, I guess is kind of what I'm trying to.
Well, thank you, Ethan. I want to thank you very much for joining us today. We really, really appreciate it. Your second time talking to us with all your expertise. Again, Ethan here is the Midwest Regional Manager for a 6-state region. That's real money you're talking about here. I'd like to thank Xcel Energy. For being our sponsor, not just for this, but for the whole series beginning this year. Our webinar, these are sponsored by 5 chambers working together through this crisis on your behalf: the Apple Valley, Burnsville, Hastings, Lakeville, and River Heights chambers. Also, we have a special announcement. Don't tune out just yet. Today, beginning at noon, the county has approved, which most of us chambers had mentioned last week was coming, is a new $8.4 million grant program from the county. And the chambers will update you later today on that. In order to follow up on this, a new announcement, Lisa Elfson, who's in charge of the program for Dakota County, has a special real-time solution with us 5 chambers, a special one next Monday from 2 o'clock till 2:30, and she'll explain it in detail. But this is the county coming through again with another $8.4 million in grants. Then later in the week, next week, we have a special treat. We have a national speaker, Annie Meehan. She's going to do a program called Be the Exception. She's a motivational speaker. She really will fire you up. You probably don't need coffee next Wednesday morning. And this one's going to be a little different because we're changing it up a little bit this year. It's going to be interactive. She'll be looking at all of you, and it'll be very interactive, as if you were there on Zoom. And we're going to try to do it that way at least once a month, depending on the topic. Let us know your topics. Let your chamber know. And thank you, Ethan, very much. And thank you, Xcel Energy. We really appreciate it. Thank you, everyone. Have a great day. And look for those announcements from the county later today. Thank you.
Thanks, Ed. Thanks for having me on. And I think it was Sandra who had the question. Just
yes, I know her personally. She was driving, so she couldn't follow up, it said.
Fair enough. Thanks, everyone.
Thank you.